Never show the IRS that I'm making any money.
Okay.
When you get your first job and you're making 200 grand, your goal is to get that 200 grand to 11,000 bucks.
How do you do that?
Your taxes on this is going to be 1,100.
Right.
I want to spend $189,000 on goods and services that could help me make more money next year because I'm never paying the IRS. Let's say I made 200 grand and I could keep 189,000. I'm going to take that and go buy a $400,000 piece of real estate that'll give me $189,000 depreciation, and now I only pay taxes on 11,000.
So how do we get the money for the down payment?
You got a job with me, 200 grand a year. You're not going to spend any money on your lifestyle. You're going to park all that money into a real estate deal, and you're going to use it as a down payment to buy an income producing property.
Man, Grant, you're making a bad name for us other Grants out there, but make sure that you teach her about real estate professional status or short-term rentals. Just because you go out and you buy a piece of real estate does not necessarily mean you're going to be able to use those losses to offset your income. There is something called the passive activity loss limitations, which essentially says that you have to be a real estate professional in order to take your rental losses and offset what it seems like in this video a W-2 income. It just wouldn't work. Now, there are workarounds with short-term rentals that could potentially work, but it doesn't seem like that's what they're talking about. He just simply said go and buy a piece of real estate, which again, by default, you would have to be a real estate professional in order to use that to offset your income. Now, if you are a business owner, it may change just slightly. Let's just say that you're a doctor and you're tired of renting out a space. You want to go and buy an actual building and actually use that building and operate your business out of that building. Yeah, you can use depreciation to then offset your business income in that situation. You can use a cost seg, really drive up those depreciation numbers and then offset your income. But again, there is also something that Grant is forgetting to mention, and that is depreciation recapture. Because if she ever decides to sell that property, all that depreciation she claimed has to be recaptured back as ordinary income. Okay, so that's one thing to keep in mind, is that, yeah, there is a lot of benefits to doing cost segs and getting accelerated depreciation for that time being. You know, if you can use it against your income, that's great. If not, it becomes a suspended loss. But whenever you do go and sell that property eventually, you will have to recapture that tax. If you do something like a 1031 exchange, don't forget that depreciated cost basis, that adjusted cost basis is going to be your new cost basis in your new property, okay? So again, there's a lot of caveats that go into real estate, but be careful whenever you're taking advice like this from big influencers.